Hi there, this is Ryan Cunningham again, owner of Cunningham Tax and Accounting LLC. Here at my downtown office in Colorado Springs. But like I've mentioned previously, we can do taxes for anyone, anywhere in the country or outside of the country using our secure encrypted portal that we can share documents securely back and forth. So today I wanted to talk to you about something a little more complicated. This is the tax treatment of capital gains and losses for tax year 2019. Now there is the Schedule D that the capital gains and losses are reported on. They're calculated actually on Form 8949, and if you sell a stock, a bond, any type of security, commodity, foreign currency contract, you're going to receive what's called a 1099-B, and they should have some sort of basis on there, but that's not always accurate. Basis in terms of capital gains and losses, either net short-term gains or losses or net long-term gains or losses, require a basis to determine the gain that must be reported as taxable income. Now, short-term capital gains or losses are held for a period of 1 year or less. Long-term capital gains or losses are stocks, bonds, security contracts, things that I had just mentioned, that are held for 1 year or more, or over 1 year. And the tax treatment of the two are vastly different. For net short-term capital gains, they're taxed at the individual's ordinary tax rate. However, with long-term capital gains or losses, they are taxed at a much lower rate if you hold these securities or bonds or what have you for over a year. You have the ability to, based upon your income, to be taxed either at 0%, 15%, 20%. There's a 28% that falls in there, but that's for very obscure collectible sales or small business stock, typically something that people are not really engaged in with any regularity. Sometimes you'll see it, but not much. So for single taxpayers, long-term capital gains rates are 0% from $0 in income to $39,375 this year. For married filing jointly, the 0% goes up to $78,750 before you hit the first tax bracket of 15, where you're actually paying tax. Married filing single, similar to single taxpayers, that's $39,375. Head of household is $52,750 until they have to pay tax on long-term capital gains. And then estates or trusts, much lower at $2,650 before they have to pay in that 15% range. The 15% range for singles, $39,376 to $434,550. So there's quite a lot of income that can be made until you hit the higher bracket of 20% for single and all tax rates. Married filing jointly and qualifying widower actually goes up to $488,850, and the married filing singles is $244,425. And head of household goes up to $461,700 at that 15% rate, and then $12,950 for estates and trusts. And then if you go over that, you are in the maximum capital gains rate. Obviously, I said there is that 28% rate for collectibles and small business stock. But if you go over those amounts that I mentioned for those varying filing statuses, you will hit that 20% rate, which essentially is the maximum long-term capital gains rate. So I know this doesn't affect everyone, but a lot of people do sell and buy stocks, bonds, securities, commodities throughout the year, and just wanted to give you some information regarding that. If you have any questions, feel free to give me a call, 719-800-4TAX, and my email is info@cunninghamaccountants.com. Thanks so much, and have a great day.